Okay. All right. So let's see. It's 10 a.m. Means it's time to get the old show on the road here. What gathers us here today is a little demonstration with RPR commercial. What we're going to do is jump on the commercial side and utilizing the site selection tools. We're going to locate a property based on the attributes that, our theoretical client wants us to be around. And then we're going to run through valuate and create kind of a hold analysis on an investment. So that's the game plan. Hopefully that's what you're expecting. Feel free, if y'all would like, to jot down my email address. It's just nathang@narrpr.com. Before we get into the actual playing around on the system, though, is where we come from, how we collect our information, and the data access that y'all will be able to have. So first and foremost, I think it's important to state that we are, a subsidiary of the National Association of Realtors. What that really means for y'all is, once you become a member of, NSDCAR, for instance, joining at the local, state, and national level, you have complete access to everything that RPR builds. And so that includes, obviously, the residential side, but also the entire commercial side. There's broker tools in there as well. There's mobile applications. There's all types of stuff that we build. And we are a true benefit of your realtor membership. So keep that in mind as you consider, trying to work RPR into your technology stacks and your workflows. What we are from a company standpoint, though, is really a property-centric database. And so I thought I would talk a little bit about, how that property information comes in the system and where all we are collecting it from. And so this is kind of our, data build as far as it comes to a building. So we start off with the public records, and we have nationwide, or you have nationwide access to, public records on both residential and commercial. So that is our standard floor. And from there, what we do is we, to create more and more partnerships with other data sources. So for instance, your local MLS there, I believe it's Sandacor. It might have changed names by now for when I was working in the area, but we partner with MLSs and what are known as commercial information exchanges and bring in the listing information from realtors across the country. And that's paired with the public records. So within RPR, you can pull up a property, and not only will you see, the listing information, but you will also see the public records as well. You can also just do public record searches and look for properties that have been, off market for the last 10 years, and you think maybe they want to put it back on, and so forth. So from there, we just try to add more data. So we have things like tenant records that we bring in for, as many buildings as we're able to. And then, of course, being the experts that y'all are, you can add your own knowledge about these properties as well. The other part of the listing, data sets, I guess you would call it, last, 2 years now, I guess, we've really been trying to expand our partnerships and increase the commercial listings within RPR. And so what we have done is we've made partnerships with companies like Crexi, Brevitas, Land Broker MLS, TotalCommercial.com. We're about to launch with Brevitas as well as OfficeSpace.com as well. And the goal really is to supplement, your local MLS and your local CIE feeds with these national partnerships, hoping that we're able to capture some non-realtor listings in your market. And so what's kind of cool about RPR, you come into RPR, you do one search and you're searching against our public record database, your local MLS information, as well as all of those national feeds, in a one search type of process. With that, you can also obviously, do nationwide searching as well. So, maybe you're working with a unique space and you're trying to see if there's, a similar one that's in a similar marketplace. Maybe you want to look for hotels that have sold in Seattle since it's been a tough market for the luxury folks out there. You can do that kind of thing within RPR as well. So just keep that in mind. We do bring in a bunch of national partners into our feeds as well. The other side of the system outside of the property is really being able to understand the community and try to make the best fit for your client. And so for that, we really have the backbone of our community data sets being Esri. They provide us with, all of our economic and demographic data sets. They provide us with their Esri tapestry segments, which are kind of like profiles of the people that live there. They group people together in a certain manner so that you can go beyond their age and that kind of thing and really understand, what preferences they might have and how they might want to work. So that's pretty interesting. We'll probably be able to take a look at that towards the end if we have time. I'll try to pull a trade area report because I think it's a really powerful thing. But we also have things like traffic counts and business points of interest and opportunity zone map layers and all these other data sets and layers that really help you to find the right space, but also to pull out marketing points that are going to help you hopefully sell your property in a faster manner and maybe even for some more money. Who knows? Some workflow tools. Custom trade area report. This is what I was kind of talking about earlier. Utilizing this Esri data set, you can drop a pin on your property, use the drive time or the radius tool, and you can see the population density, the daytime density, income levels, all types of data sets like that around the property that you're looking to either purchase or put on market. We're going to use this tool here in a bit. Part of this presentation is strategically investing. And so this tool allows us to target specific areas based on the attributes of who we want to be around or the economic or demographic conditions that we need to exist in order to power that business. I love this tool the most, and you'll see here in a bit why, but it's really great because it goes beyond just things like, retail or multifamily. You can really use this tool across all of the, cash flowing and commercial property types that you might want to. We also have this investment analysis tool, Valuate, which we're going to dive into here shortly as well. This allows you to do your typical 2 to 10 year hold analysis, which is exactly what we're going to do here. I'm going to target a multifamily space, which is a little different than running your industrial or your office. It has a couple extra options there. So keep that in mind as we're kind of working through today's project. If you do have, if you're working with an industrial investor and they want to understand, if this is a good purchase price for the next 8 years, there's a couple things that are going to be a little bit different. And there's definitely some training videos we have online that can help you out through that. But I'm going to guess if you are able to kind of grasp a lot of the stuff we're doing today, any other variation in Valuate is going to be pretty, not easy, but it'll be forthcoming to you, I would imagine. So the other thing you can do with Valuate is flip analysis. So if you work with residential flippers, or if you are one yourself, you can use this tool to kind of gauge the potential profitability of a flip based on hold periods and renovation schedules and what happens if I hold on to this for a little too long and so on and so forth. And then for any of y'all who like to play in the dirt, do development projects, there is a back of the envelope calculator for land development. It looks at the density allowance, which is typically going to be an FAR based, floor to area ratio based on the size of the plot, and then you can understand whether or not based on market building costs and time to lease up a space and so on and so forth, whether or not a development's going to be worth the risk, or at least kind of whether or not it pencils out before you really dive deep into it. Okay, getting started, creating your account, pretty easy. You go to narrpr.com. You walk through this really quick process. The key is we need to know your NERDS ID. If you don't know that off the top of your head, we have this email option, which is, honestly what a lot of folks do. And then you'll get this little email that says activate my account. Once you get there, the next key step is to just make sure if you are a subscriber of the MLS that you add, that feed as your subscription. That way you will get to see all those listings. For the national partnerships, the Brevitoses, the Crexes, et cetera, you don't have to add them. They just automatically will appear in any of your searches that you are doing. And then you just create your password and away you go. We do have a mobile application, which will do most of what we're going to do today. Actually, it doesn't have that site selection capability, but you can pull up a property and run an investment analysis from your mobile device if you want to get wild while you're out there. I do want to mention, we do offer branding of our site. So you can see some of the folks who have taken advantage of that offering. Basically what it will do is it will, once you enroll in the broker services tools, or if your broker in charge does, it will rebrand our site with your company logo. It'll rebrand, you know, all of the printouts and the PDFs and the splash pages and so on and so forth. You know, I come from a marketing background, and so, you know, brands, I know how much work goes into not only just coming up with a nice logo, but building trust in that in a community. And so we want to make sure that we are carrying that work forward through RPR. So like I said, there's tons of training online. You know, if you are interested in looking at evaluate from a industrial or an office perspective, this other long-term hold class is a great one for you to kind of check out. And that will allow you to kind of see what it looks like, you know, from a non-multifamily process. But there's all these other courses y'all can take advantage of as well. You have 24/7, 365 customer support here available. And then, of course, we have these little inline tutorial videos that I'll point out as well. And if y'all want to, again, my email address, nathang@narrpr.com. Feel free to reach out to me and let me know if I can help at all with any of this stuff, regardless of it's something that we go over today, or if it's something that you think would be cool to add to the system or whatever. And so let me go ahead and transition ever so smoothly over to RPR. And at this point, I noticed that we do have a chat. Jasmine asks, is RPR included with my membership? Yeah, so RPR is in fact a part of your, let me back that up. RPR is actually a subsidiary corporation underneath NAR. So everything that we build is a part of, you know, your dues benefit. And so part of your dues that you pay on the national level is what funds our budget. And so yes, everything that we create, build, et cetera, is going to be available to you at no extra cost. And so let me see here. I updated my browser, and now it's all weird trying to figure out how to cut things off. But with that, let's go ahead and start playing with our example today, which is going to be looking at some strategic investing in a cash flowing property. So that's the technical thing that we're going to be doing. Really what we're going to do is jump into the commercial side. You can follow this process, you know, from any type of space, from a single family rental income all the way up to, you know, a multi-unit hotel operation, you know. So keep that in mind. Our goal for today is to really just make you aware of kind of the site selection side of RPR. We're going to touch on the various reports as we walk through all of this. And then we're also going to obviously spend some time and evaluate as well. So those are kind of the main goals. Before we jump into those, I do want to point out, as always, y'all have this number down here. You can access 365 days a week. Give our customer support a call. They are based in Omaha. They're actually trained on the system. They're very knowledgeable. So I would definitely encourage y'all, if you have questions as you're playing around, give those folks a holler, or you can use this live chat option. They're really great, and they're going to be able to get back to you really quickly that way. Also, the scholarly cap, there are some various videos that y'all can watch, and every page you're on will have a different kind of lineup, I guess you would say. So depending upon where you're at, we think we have some training help for you there that's going to help either remind you of what you can do, or explain some data sets and so forth. So with that, let's go ahead and jump into today's example. So we're going to go into our analysis area, and we're going to ignore these two options down here, and we're going to use this tool called Where Are the Right People for a Business? And so the first thing we do is we plug in, you know, whatever area we are interested in, and we will go, actually, let's just go countywide. And if you wanted to, I know y'all are mostly in that North County area, La Jolla and up, and you can actually create a specific area if that's what you want to focus in on using this select area on a map. You can use the polygon drawing tool, for instance, and just really kind of map out, what part of North County y'all are interested in, looking for opportunities. But again, if you just want to look at all of San Diego County, you can definitely just plug that in as well. And the whole point of, this tool in particular is to hopefully save you time. Instead of looking for every, in this case, a multifamily property, all the multifamily properties in all of San Diego, this will allow you to hopefully target a few and kind of go from that angle. Okay, so this part of the conversation, hopefully you've had, or, with your client, or you just kind of understand what they're looking to do or be around. And so for a multifamily rental income, single family rental income, whatever you want to call it, my thought is that you might want to be around folks who are young. So I'm trying to find like that long-term renter base, I guess you would say. So I'm looking for younger folks. We all know from the news stories about the issue with student loan debt and how that can impede the ability to obviously save up money and put that down for a down payment. So I'm going to try to target areas that are, have higher rates of student loan debt. And then also I want to understand, what rents I might be able to get. So I'm going to look for income per capita, just kind of understand that as well. And then we can also look for, demographic data like population growth in the area. So that's kind of the key attributes. There might be different ones that you might look for. The thing that you want to keep in mind with this tool is that it is super flexible. One example that I've done before is a gentleman down in Tallahassee wanted to use this tool to figure out where to place an ice cream parlor. And he knew that he wanted to be around families, and he also wanted to try to figure out, what people spent on ice cream. And you can actually come down here to what they buy in food, and you can see things like household annual spending on ice cream. I mean, it's a pretty in-depth tool. So this is one of those things you just kind of want to play around with. And once you kind of discover, the data sets that work for you, jot those down so that next time you're looking for, a multifamily opportunity or a senior care living facility development process, you kind of know how to get to that. And then as you use the tool, obviously you'll be able to build on that. For this one, we're going to start off with who they are. We're going to come up next to, the age. So we want to be around those early adults. So we're going to come down here, and you can see how this works. It's basically, kind of like a rabbit hole. Once you start here and you fall into the next one, and then you keep on going down. There's tons of options, as you can see, lots of different breakdowns. For this example, I typically use the early adulthood. And the reason for that is it's because it's the people between the ages of 20 and 39. Assuming that is kind of my quote unquote early adult range, that saves me from having to select both of these and allows me to use, because you can only use 5 different attributes. It allows me to combine that into one if I, should want to do all 5. The next thing we're going to look for is student loan debt. And so again, this is under who they are. And this time we're going to come down here to personal finances and other debt. And then we're going to select this one and look at student loan debt and click OK. And if you're curious, where this information comes from, all you have to do is just hover over these. And you can see, first of all, the definition, like we saw earlier, but then you can see this is Esri's consumer. It's coming from Esri via the consumer expenditure reports. And this was collected in 2019 and interlaid into our platform. Next up, we're going to look at the income of these folks, so who they are again. And now we're going to come to income. And again, tons of different options here. Since we're looking for rentals, I think per capita is probably a good one. You could also look at something like disposable, or if you wanted to be in a specific income range, you could even plug that in as well. And then the last one we're going to do is facts and stats. And then we are going to look at population stats. Actually, you know what? Let's do population trends. And let's look at historic population growth rates and click OK. And so for this example, this is kind of what I want to factor in. I will show you a couple other ones that you might be interested in. Things like, what they buy. And you can come here and look at things like housing. And you can see, you know, vacation homes, are they renters, owned housing. Facts and stats is another good one for some of this types of situation, looking at, you know, what people percentage-wise rent a home or own a home. There's also what they buy and then actual spending on, you know, that housing. So those are kind of the other ones that I sometimes consider as well. And looks like we just had a question pop up. Nathan, is this also available for individual residential agents? Is the platform available for the Paragon site, or is this a different application than the regular RPR we access from the Paragon MLS? Yeah, so this is the same RPR that you can access through Paragon. This is just the commercial side of it. So it may be that, you know, being a mostly residential practitioner, you haven't kind of ventured over to the commercial side. And you know what, I'll pull up here in a bit how you can do that. But yeah, once you toggle over to the commercial side, you know, assuming you're working with a investor in residential properties, you can definitely come over here and run this type of an application. But keep in mind, most of this data is, you know, something you can't really say or use when you're advising a residential homeowner to purchase a space. You know what I mean? You can't, you know, because of steering and the fair housing laws, you don't want to use this if you're advising a residential client. Unless they are a residential investor, then they're looking for the cash flows, and it's perfectly okay to use this type of data to help guide them, just like we're about to do today. But since we're on that topic, let me actually pull up really quickly RPR. And so what's happening is when you come in from Paragon, you probably start here on the residential side. And what you can do is, if you're actually looking to advise an investor or a commercial client, you just come over here to the commercial side. And then here's all the search and the investment analysis stuff. Okay, very cool. All right, so yeah, and y'all feel free to throw some questions in that Q&A box. I do not mind the interaction, to say the least. So it's more fun if there's people jumping in with questions and that kind of thing. But y'all can see what this is. So let me scroll up a little bit. So obviously this is the area that we are looking at. Here is the, you know, best match based on the criteria, which is down here. And then we have here the geographies that we're looking in. So if we left this as cities, we could come down here to what I like to call the benchmarking report, and you can kind of see the top cities based on the categories that we have plugged in. Me personally, I don't usually use the city geography. I like to use the zip code one when I'm looking from a county-wide basis. And the reason for that is it shows me a little bit more of the clustering. So there's smaller, you know, geographical areas. I'll also point out that, you know, if your first geography is smaller, like say a city, or maybe just Oceanside, for instance, or maybe just, you know, the Ramona area, you could get all the way down to like the census block group geographies. So depending upon, you know, how large this area is, will kind of guide our system as to which geography layers you have access to. So that's kind of how that works. And then what happens is once I toggle to zip codes, now you can see all of the various zip codes that are a good fit. And what I love about this is, you know, again, I like to call this a benchmarking report because it allows you to benchmark each zip code directly to the next. And so, you know, if you're ever needing to, you know, guide your client into a more optimal area, and they are just looking for some third-party data to kind of back up what you're probably already telling them, this is where you can collect that data from. So I always like to kind of kick off, you know, my theoretical presentations with this report. And so what I'm going to do is come up here, click on create a report. You can see if you ran a residential report, this is drastically shorter. There's only 3 different elements there. So I typically just leave those top 3 checked, and then you can decide if you want to include the about RPR data or not. We'll go ahead and run this, and we'll kind of continue on with our process here. So we'll go back into the analysis results. And so again, the whole point of this exercise was to find the best areas based on, these attributes. And so, maybe since you're a little bit more familiar with the North County area, maybe you want to start off by looking just in Oceanside. You can definitely do that. Or, you could select multiple geographies here at one time as well. So let's say that we just want to look in Oceanside first. We can always come back to this and look for other spaces if we don't see properties. But this is where you're going to select either search just the for sale listings, or if you want to search all properties, meaning everything on market and off market properties, we can do that. Personally, since I know we're looking for an investment, I'm going to start off with just the kind of for sale properties here. And we can see there are 56, available properties on the commercial side. Now we can narrow this down a little bit. Let's say that we want multifamily, which is basically going to be anything 2 units and above. I believe for your market, I think y'all have it set up so anything that's 2 units above goes across both sides, the residential and commercial side. So we might be able to, look at a smaller example, which might be a good opportunity for us as kind of a training set. But now you see 12 different properties. Let me go ahead and just look at all 12 at one time. So there's a couple things we could do at this point. One thing is we could print this page out, and it would literally print out the entire list here just so I can have a point of reference if I wanted to. The other thing, which is kind of cool, and I'm sure if y'all do any residential work, you've played with the mailing labels option, but I don't know that you've used the CSV export as a possibility. On the commercial side, sorry about that. That was a loud ding dong for the report to be done. But you can actually export these properties into a CSV. And, on the commercial side, typically we can only get down to the LLC or the corporate owner as far as the ownership details. But it does allow you to at least see the properties, and then you can do a little bit of digging and figure out, if it's a opportunity that you want to pursue, or you can load these properties into your CRMs as well. So that's just kind of a little bit of a different way to use the mailing labels options that y'all might not have done. And then from here, basically what we're looking for is, a property that kind of matches price and maybe unit size and opportunity wise. To me, these are all seeming kind of expensive and maybe a little smaller. And they all look kind of new as well. But here's one. So here's a good example. So this is a duplex, or, it looks like it's 2 standalone single family properties on one lot. $610,000. Looks like there might be an opportunity to do some renovations even that might improve our potential rents. And so, for me, this might be a good example for us to kind of walk through. 2 separate units on one lot in Oceanside, great opportunity to make an income. 2 single family homes, have their own interests. You can live in one and rent the other. And hopefully that'll finance our nice beach lifestyle. But we can see here, we have the owner facts. We have, the basic details. Looks like Jeremy here is running a business out of one of these properties. We have the public facts. We have the listing facts. I'm sure y'all are aware, but you can, update these however you want. We can, call it a duplex. We can add other information here on the new row. So maybe, distance to beach is important for this one, and it's 1/2 mile. So it's kind of cool. You can add whatever you want, through these your changes. And basically what this is going to do is going to, be there for you and for your PDF reports and all that fun stuff, but nobody else really gets to see that. So that's kind of a cool feature here as well. All right. So I don't see much as far as, what the rents are here. So we're just going to have to make up some income and expense information. Or, in real life, what I would probably do is reach out to Erica here, either by phone or shooting her a quick email, and see if she has any, trailing 12-month financial data that we can look at. Otherwise, you can always use, market rents for, this type of a space and kind of try to project on that one as well. It is difficult right now looking at financials as far as trying to price things appropriately, given everything that's going on with, the corona pandemic world that we are currently living in. But we can still kind of walk through that process. So what you're gonna do is click on that evaluate link. There's a little kind of interstitial layer here that says, all right, do you need to do some training first? Here's some of the videos that we have available if you wanted to. It's a great way to kind of brush up if y'all need to look at this later on as well. And so this takes you over to evaluate. And I always like to start here because unless you hit your max, which you can see here is 5 files at any one time, you will start on what you're going to see next, which is our quick load screen. But if you do have 5 files, maybe you're just playing around and running some tests and making sure you're comfortable with it, you can either upgrade or you click here and you select whatever ones you want to hold on to and submit that selection. And then you can then, jump into the analysis, that you were trying to start to begin with. Okay. So up here, everything in blue, you can change around. You can see, you can do single family residence. You can do mixed use properties. You can do hotels, retail, et cetera, et cetera, et cetera. We'll keep this as multifamily since it is 2 properties together. We'll just kind of treat it as a basic duplex. And we can call this, whatever scenario you want. So what's cool about Evaluate is you can run different variations. So like I said earlier, maybe we're going to look at this with renovations. And then we could do a non-renovated scenario and just kind of see which one makes the most sense cash flow wise at the end of all this. You can actually compare them side by side and all types of cool stuff. All right, so we got the square footage, the rentable square footage per square foot. 1530, is that right? Let's see here. I don't see building area 1530. Let's assume that that's just the one for now. And let's say that there is actually, we'll just round it up, call it 3,000 square feet. And then what we have here is the purchase price. We have the number of units. So right here, gross rent and then operating expenses. This is what I was talking about earlier. We'd have to reach out to the listing agent. I think her name was Erica on this one and try to figure out what the potential rents are. Again, if the rents are a little wonky due to the pandemic, you can also always just plug in the market expectations, kind of moving forward that way as well. What I did, let me see if I have this already open. Yeah, so for some of y'all, you're probably familiar with how to generate your cap rate, but I thought I would just kind of show y'all a really quick example. So here's our purchase price. I'm making up these numbers, obviously. So we have 60,000 in total rental income. Between the 2 units together, we're getting about $5,000 a month. So that's 2,500 per unit per month. Expenses, 15,000, taxes, insurance, maintenance. Those are the kind of expenses that we want to plug in here. We don't want to plug in, those one-timesy costs like, last year they had to replace the roof. You don't need to include that in a reoccurring expense or as a reoccurring expense. So keep that in mind. But that's going to give us a net operating income, NOI, which is basically this 60,000 minus this 15,000. So we get 45,000 in net operating income. And then all we got to do is we divide the NOI by the purchase price, and that will give us our kind of going in or our purchase cap rate. So we can kind of see how that works. And then you'll see here, the system will automatically, based off of those informations, those data points, it will kind of carry that analysis forward for us for whatever hold period we're looking at. So let's see, we had this set up at 60,000. We'll hit enter there. And then we have 15K in expenses. One thing I'll point out for you, if you come all the way down here to the very bottom, we do have the tax amount. So you can figure out what that is pretty quickly and easily. And then you just kind of have to understand what some of the other expenses might have been. This is our inflation factor, I guess you would call it. And so we're going to bump this number and any other reoccurring expenses up by 2% year over year, as well as any incomes 2% year over year. Tom asks, what is considered to be a good cap rate for investment properties? A good cap rate for an investment property really depends on the potential buyer and the other, income generating investment opportunities that are currently going on out there. So if somebody's looking at purchasing a commercial property, I would imagine they're looking at what they can get from investing in bonds, a relatively safe investment, what they can get from, something like the S&P return in the stock market. And then, on the property side, it's going to vary. If you're looking at a space like this, that maybe you have some risk due to, the coronavirus over the first year of your hold, you probably want to have a higher cap rate. Or if there's going to be potential for a lot of renovations and, upfront expenses that you're going to come into, you might want a higher cap rate versus, right now the industrial sector is booming. And, if you're looking at purchasing a warehouse in the middle of, maybe it's just on the outskirts of San Diego and they have kind of that last mile delivery setup going, that cap rate could be like, 4% or something. So there is no good cap rate. It's all, kind of looking at what's going on in your market and understanding what a multifamily cap rate typically looks like for the type of property you're looking at, or whatever other sectors. So hopefully, I know I didn't answer your question directly, but that's kind of how people decide if it's worth investing or not, looking at what the market offers typically, and then looking at what other investment opportunities are also out there and competing. It's not just competing against the multifamily space next door, but it's also competing against the stock market and bond markets and those kind of things. Hopefully that helped. Is there a training video specifically for flipping? Yes, there is. So if you go to, when we first clicked on this link, you can go to view training. You can see there is a residential flip analysis. Okay, so here is our setup. We have a duplex that we're looking at buying for $610,000. It brings in 60 grand a year in incomes. We're going to spend about 15. There's our income rate. Let's say we're going to look at this January 1st, and it doesn't go all the way out yet. We'll have to, I guess, say we'll take it over now for now. And then we have here, how long are we going to hold on to this? So this is your hold period. The 7 to 10 year range is kind of typical for commercial properties. Trying to forecast beyond 10 years is just, I don't want to call it insane, but that's a long ways away from now. And there's no telling really what's going to happen between now and then. And, what this really is kind of our best guess as to what this investment's going to look like based off of our, whatever knowledge we currently have. So we'll call this a 7 year. Let's bring this down a little bit. Let's say that our LTV or our loan to value is going to be 50%. Our interest rate, we'll call it 5.25%. And then equity players, this is just the number of investors on this project. And so we'll leave it at 1 for now. And if we have time, we'll add an investor later on. Then all we do is hit submit. And you'll kind of see how this works. So basically what Bruce Kirsch at Real Estate Financial Modeling did when he created Valuate was he looked at all of the Excel spreadsheets that are typically used and kind of converted those into this platform. So everything kind of runs in the background. You can see with this little warning, the system tries to help out as much as it can. And I'll show you what this looks like. Basically, this is saying, all right, hey, you might have an error. You're not wrong. There might just be something you want to look at. This one is our sales valuation is less than our purchase price. So if that's what I intended, cool, I can ignore this. Or, and I'll show you here in a bit, we can actually fix that issue. So at the very top here, we have an unlevered and a levered kind of return summary. And so if you're curious what these words mean, unlevered just means without a loan, levered means with a loan. And so this is based off of what we've inputted, what our internal rate of return is going to be over the entire 7 years, the equity multiple or cash on cash returns as well. And you can see, leverage, taking out the loan is going to magnify the returns. It will also magnify any losses that occur as well. So that's kind of what we're going to be kind of focusing in on as we're making these adjustments is, what these numbers up here end up looking like. And so you can kind of see how this works. There's our our year 1 cap rate. So after we purchase this and we've held on to it for a year, this is what the end of that year is going to look like. And then the system kind of bumps up this cap rate, which will end up becoming our sales cap rate by 0.25% every year. And its process is, all right, it assumes that we're not doing renovations. It assumes that nothing's improving. The cash flows are going to grow by 2% year over year, so on and so forth. And so this may or may not be accurate based off of what you end up doing with the space, but that is kind of the default. It's just assumes that there's more competition coming on the market. If we're not doing renovations and so on and so forth, we're going to have to sell it at a better cap rate than we purchased it at. And so you can come down here and we can see right off the bat, if we are able to buy this for $610,000 based on those revenues I made up, we're coming in at 7.57%. We can then come over here and we can see we're holding on to this for 7 years. Based on that 0.25% increase year over year, we're going to sell it at about a 9% cap rate, which ends up our property value losing almost 2.5% in value. So if that's what we think is going to happen, if we're not doing any renovations, then it is what it is, But what we can do, which is really cool, let's start here. Let's say that I know that this is a great opportunity, and I'm willing to pay up. I don't think this is going to be on market long at this price, whatever it might be. I can go in here and say, all right, I'm willing to buy this at a 6.5 cap, which is going to raise the purchase price. And so if I do that, you can see here, everything changed. So I can really quickly see, all right, well, I thought I was willing to do this at 6.5, but man, when I do that, my return for taking out a loan, which I wanted to do, really drops, and it almost is better now to not take out the loan. And I don't know if I want to do that. So it's a really great way to kind of just test the boundaries of what you're willing and not willing to do with a space. Turn it to 7%. You can see here, all right, we're willing to go up another 50,000. This is, comfortable for me. I can live with that. And then we can come over here on the disposition side and say, all right, well, I'm going to do some renovations, so I don't think I need to, hold it here at this 9%. Let's say that we're going to sell it at 8.25, probably after 7 years. And we can see that drops. Let's try to get this into a positive. Let's say that we're going to sell it at 7.5, just to make it juicy for us. And now you can see there's a 8.93% property valuation growth. And so if that's in line with what you think is going to happen, you can kind of continue on. And so from here, basically what we're going to do is kind of walk through all of these little tabs. And so this levered analysis does exactly what you might think. It looks at this from a levered standpoint. If you're curious what this big jump is, I'll show you here when we get to the source of funds. There is the option to refinance after you have done your renovations and you've maybe improved the market rents, and the bank might look at this at a better eye, and you can kind of see what that bump will do. And then we also have here all the basic return ratios on the levered side, your internal rates, your net present value, and your internal rate of return as well. So this is really just to kind of give a quick check. I honestly typically don't spend a lot of time there. But next, what we're going to do is jump into this. This is our rent roll, and this is important. And so this is a little bit of a simplified situation. We only have these 2 units, but if we come over here to unit mix, right now the default is kind of studios. But we have, as you can see, these 2 columns, renovated and unrenovated, which allow us to clearly define for our buyer, what these spaces are. And so if we have 1 3-bedroom, 1.5 bath, and then we want to add, maybe the other one's a 2-bedroom, 2-bath, whatever it might be, you can plug that in. And now we have, the square footage. So maybe this one is actually, let's just make this easy on myself, 2,000 square foot, and then this one's 1,000 square foot. You can really start to see how you're able to kind of show your client exactly how all of these units are performing and get really detailed about them as well. And so once you have kind of your unit mix set up, we can come over here to the rent roll. You can enter in the unit numbers, any specific features. Is it occupied, vacant, or, are you going to live in one of these and it's non-revenue at that point? You can set all of those details up however you kind of see fit. You can set the lease starts, the lease ends, save any changes you might want to save, and away you go. The other thing, since we are going to do some renovations here, you can also put in what's called a post-reno rental premium. And so if I think we're going to be able to get, I don't know, $250 extra for these units once I do my really nice renovations, we can plug that in, and that will automatically, you'll see here when we get to the cash flow tab, once we do our renovations, that will automatically factor in. Okay. Next up, we have here the cash flow tab. And so we have our fiscal year begins. We have, if there's going to be an asset management fee, you can plug that in. There's our hold period. Here's a synopsis of our year one revenues and our expenses, our NOIs, and so on and so forth. Here's our rental growth. You can see that goes ahead and carries across. You can see that there's already a 2% growth over the prior 12 months because we put in that 2% bump up. So as long as that's in line with the, a relatively safe assumption, you can keep that there. Then we have the renovation details. And so if you're not doing renovations, you can skip all of what I'm about to go through and not worry about it. But if you are going to do some renovations on this multifamily project, you're going to tell the system, how long are you going to do these for? We have 2 units. Maybe they need a decent amount of work. We can sit here and say, all right, what's the duration per unit? We'll call it maybe 3 months on each unit. And then we're going to remarket this. You don't put hammers down and people magically appear. So we'll take a month to remarket. And then the average rental unit, or I'm sorry, the average budget per unit, let's call it 30,000. And we can kind of see maybe what that'll look like. We can always adjust this up and down afterwards. From there, maybe we think we're going to save 10% on our repairs and maintenance. Maybe we pay for utilities in some stance, and we think we'll be able to save some money there. But you see how this works. There's also this vacancy loss. So, if you want to take a percentage, this is only 2 units, so it's a little, kind of an interesting thought process to do that. But, you can plug in, I think the kind of rule of thumb, typically folks plug in a 7%, loss over the entire hold. So you can factor that in. You just have to kind of enter it into each one of these as I'm doing here. And then just kind of continue that forward. And then next up, you have any of your incomes. So, if this was a area and you have laundry installed and you're able to collect, I don't know, $1,000 a year in quarters, you can plug that in if you wanted to. If there's late fee collections, you get, a lot of this is obviously going to be a little bit more pertinent for those larger multifamily spaces, but this is where you would add any of those kind of, non-rental incomes. You can even see here, if you have retail on the bottom floor or something like that, you can plug in a triple net. Next up, we have here our expenses. So it all comes to miscellaneous to start off with. So if you want to pull that apart, you can. And what you can do is, just plugging in things like real estate taxes, $1,500 here. Maybe repairs and maintenance is $5,000. So now we're at $6,500. Maybe marketing and advertising, maybe it's $500 a year, something like that. And so once you kind of have all of these things set up, what you're going to do is you're going to take that out of this number. So we have $7,000, right there. Just make sure you pull that out. And what's cool about this is it starts to calculate your percent of EGI. And so if you have here, repairs and maintenance is really high, and you're a good manager, you have a great maintenance team, you can lower that. It's a great way to kind of identify other ways you might be able to save some money and make this even more profitable. It looks like we had a question pop up. Is there a way to create a template if you have similar expenses for similar properties? Yeah, so what you can do is actually up here, save as new, and then save as either a new property or a new scenario. So once you have, this whole thing set up, just come to File, Save as New, and then Save as a New Property, and then you can just start that whole process again based off of, the inputs you've already put in there. And this Save as a New Scenario, we're doing a renovation scenario here now, but if you're doing a non-reno, we could save this as the renovation one and then save a new one from the scenario, and then just remove all of these renovation details that we added. So yeah, that's a great question. Okay, so once we have all that kind of factored in, the annual view is going to be kind of a detailed monthly cash flow statement for you. for each year. But what we're going to do, since we're doing renovations, is actually click on this monthly view, and the very top one, units taken offline to be newly renovated. All we have to do is say, all right, we're going to take off in month 2, that first unit, and then we're going to spend 3 months, renovating that one, and then that last month to market it. And then we're going to say, all right, right as we're about to transition, we're going to start the work on the next one. And so we're going to take that one offline. And you can see there is a crossover of 2 months where they're both offline and they are, losing rental income there. So it does automatically calculate all those details for you. It'll also bring in, the vacancy loss here. And then it'll also come down here and it'll shows all of the marketing expenses, and it kind of pulls all these numbers out on a monthly basis, and then the renovation details as well. So it's a great way just to kind of see the impact of taking those offline. And then you can toggle back to the annual view. You can see the total vacancy loss for doing those renovations. And as you schedule those out, it affects the numbers up here at the top as well. Okay. So pretty simple, using this 2-unit example really does make it hopefully a little bit easier to digest. Now, if you're doing, 100 units or something like that, obviously you're going to be spending a little bit more time making sure you have all those scheduled out correctly. The purchase and sale tab, this is where you kind of factor in some of those one-timesy things. So we have here the closing costs. I don't know, let's call it $10,000. That's pretty low. Let's call it $15,000 there. Click enter. We have our equity, our debt broker fees, if there's any. Recording fee, I don't know, we'll just call it 1% for now. We'll call taxes 0.25%, or the transfer tax. And what's cool is it automatically calculates for you, what that actual dollar amount is. And then you do have to, probably pay on the disposition or the sell side. So I don't know, let's call it 4% on the sale side. And as you're making all these adjustments, you'll notice up here at the top, all of those numbers are, kind of updating on the fly, which is nice. And then we come to the source of funds. And this is where you factor in, are we taking on a new loan, assuming an existing one? You can size it by loan to value or debt service coverage ratio, which is basically, is this a investment or a loan that your, banks are going to want to take on, into their books. Here's your amortization periods. You can see here, you can plug in the maximum loan to value that your officer is willing to kind of, work with. Same thing on the debt service coverage ratio. Just a nice little rule of thumb to kind of run through that. This is where I was talking about earlier, where you can take out either, a secondary loan using the first loan as, this loan up here as the purchase loan. And then again, once you have once you have done all the renovations and you're getting better cash flows, you can, go to the bank and say, hey, here's the new numbers. Can we adjust the loan that we're currently under? So you can include it or you can exclude it. Usually when you exclude it, it actually has a nice impact. You'll see that there, but you can see this one was about 2%. So that's kind of how that works. If you do want to add multiple investors, you would just come down here and add that multiple investor. And then you can do things like set up, different splits and all that kind of fun stuff. You can add hurdle rates if you wanted to, but we'll just keep this a little bit clean and say this is a, single person investment. And from there, we can look at our annual cash flow statement, which we kind of already did. There are these sensitivity analysis. So if you want to kind of look at the, downside risk of this investment, should things go wrong, should you have to pay up on the purchase price, and then you end up having to sell it at a drastically higher cap rate at the end of this hold, you can see what the downside risk looks like. And you can adjust anything in blue here. Same thing on net present value. Here's our loan adjustment here, so you can kind of get an idea based on interest rates and purchase prices, what your actual payments, your annual payments might look like. So a couple of little tools there. You can then share this. There's a couple ways. You hit share file and it'll generate a link. This creates a duplicate of what we have done here today, and you can then email that off to your client. Which I think is cool because then they can go in there and they can mess with whatever they want to. It doesn't change your work, but it allows them to kind of play with the information. You can also, like I showed earlier, you can save this as a new property or a new scenario. You can also compare multiple investments together side by side. So if you are sitting with your client, you can look at, here's the one in North County, here's the one in South. There are different sizes, different ranges, but here's what the hold periods look like best. So it's a great way to kind of play with things and kind of manipulate it. The last thing we can do here is we can export these into PDFs or Excel spreadsheets as well. So I'm going to export this into a PDF, and hopefully in the next 5 minutes, I can kind of wrap everything up. And let's save this file. And so I know we kind of went through this relatively quickly, but that is kind of a general, multifamily investment analysis for y'all. Now, going back to our scenario, we found this property, so we want to go ahead and create this as a report. And one thing that's kind of cool, I don't know if y'all use this, but you can add custom pages. So basically, you can do up to 5 different PDFs. There's the investment analysis that I just did. I'll put it at the end, hit save. And now when I go to run this report, you can see the custom pages up there at the top as well. And so now we can click on run report. And then the last thing that I'm going to do, go back to the property detail page. And on this map, we had those initial attributes that we were trying to, discover. We can then come here and click on drive time or distance, for instance, drop the pin on the property. And then we can say, all right, I think my primary rental area is a 5-mile radius. Click on apply, create share area report. The other thing that I actually like to do, especially if you're half your radius is in the ocean, come down here to drive time and use the drive time tool. And so what I suggest is using the 3, the 5, or the 10. Click apply. And now you have a little bit more of what I would consider appropriate area kind of to look at as far as a trade area goes. So we can click on this trade area report, click OK. I'll show you what this looks like, but we don't want that custom page, so I'm going to uncheck that. And then we'll click on run report again. Okay, so as those are generating, looks like a question popped up. Is this available in every state or just California? This is available nationwide. Yeah, so, and y'all have access nationwide to all of the property information, the listing details, all the economic demographic data sets, everything that you've looked at, you can access nationwide. The only thing that's limited is not every MLS and CIE that we partner with, the local associations. Not all of them are giving information as far as allowing people to see stuff. So keep that in mind. But here is, the first start of a presentation. So this, if you think back to the beginning of today's kind of presentation, here's the area that we were looking for. And then down here, we have the hot spots. So you can see those are a little bit of that darker purple, some of the key characteristics. But down here is where you really get into the meat of this report. This is that benchmarking analysis, so your client can really quickly see why you wanted to come into Oceanside, for instance, and look for property. And then down here at the very bottom, obviously there's a lot of zip codes here in San Diego. But down here at the very bottom, we show exactly what the information is, where it came from, how often we get it updated. The next run for this report, as far as the Esri update, should be coming in the end of February or beginning of March, somewhere around that stage. And then you'll have the 2020 economic demographic data sets. And I see a lot of questions coming in. I'm going to get through these reports as quickly as possible, just because I know some folks probably have to head out. And then I'll address any questions at the very end of this. So continue putting those in and we'll come back to anything we need to. And then here we have the property that we found in Oceanside. So we have public facts, the listing facts. There's the refinements that I added. Basically, it's everything that we saw on the property detail page, just in a nice, clean, looking report. We're, west of the 5, which back when I lived in San Diego was always an important factor for us who like to surf and fish and all that fun stuff. We have the extended property facts, location details, listing information, all the public facts, the owner information, the legal description, assessed values going back. This one goes all the way back to 2008. Here's all the deed records, mortgage records. Again, some more overheads to kind of get an idea. historical photos. So this one, what's cool about, y'all's MLS there, they give us permission to kind of save these in perpetuity. And so you can kind of get an idea. If they did include pictures, like this one didn't have any, you can actually get some of those from the historical information. And then, of course, we have nationwide traffic counts. So we wrap up, maybe not as applicable for a multifamily investment, but if you're looking at retail or, industrial, trying to figure out, access points and that kind of thing, holds a little bit more value. But if you're promoting this, maybe it's a quiet street or something like that. I don't know. And then we have here the investment analysis to kind of wrap it all up with that we just performed. And so here's the annual cash flow statement, which is kind of the meat and potatoes. And again, you can kind of see why I like to email it, because this gets kind of small and this is only a 7-year hold. So you can imagine if you're doing a 10-year hold, you got 3 more columns of this added on, which kind of makes the font a little bit difficult to read at times. But to wrap it up, we can then provide our clients with a more in-depth description of the community that's around them. So this is where I was saying earlier, you can understand the community fit. You can discover things that are more appealing to that area, or you can pull out data that you might throw on a marketing report. And so here's all the tapestry segments for this area that Esri creates. And then we get into a lot of details about who these people are, what they do, how they act, things that they enjoy. So you can maybe make a business more attractive, or, fill a need that's in that area. Or just understand the community a little bit better, which is always a good thing if you're making an investment. So we do that for the top ones that we have. And then we get into what you're probably more familiar with as the typical economic and demographic data sets. Population figures, we have the current year, and then we have 5-year projections, which again will be updated here shortly. Population change, daytime figures, household size, median age. One of the things we were trying to be around was 20s and 30s-year-olds. So I think we hit that one pretty well. With that, being a younger area, you're typically going to see some lower marriage rates. Household income levels, we were trying to understand that so we can determine what the rents might be. Looks like we're in a pretty good area for that as well. Per capita, we have here the unemployment rate. So good to see that's dropping. We have what people are actually doing, which is important. If you're in the industrial space, you need to be around workers, finding folks that are in the manufacturing and the transportation and warehousing. You can actually target that through that site selection tool I talked about earlier. Education levels, commute time, and then we wrap it up with the home valuation. So you can imagine, if I came to you and said, all right, I know who you want to be around. Here's a report showing exactly where those locations are as far as, the attributes you need to be around to make your business successful. Found a property in that space. Here's the information, ran you an investment analysis on it. And here, just to kind of make you more comfortable with the surrounding community, here's a report that kind of shows you exactly who's there, their income levels, et cetera, et cetera, et cetera. So I think that makes for a really powerful presentation package. For those of you who have been able to hang on, I do apologize. I ran 3 minutes over today, but hopefully it was worth your time to kind of joining me today. Hopefully you got something out of this. If you want to do a little bit more training, you can go to our blog site as well, which is just blog.narrpr.com. And then actually right here on the front page, there's lots of learning there, or you can come here to learning and like watch now webinars and watch all the stuff that we have created. Okay. So with that, I want to say so long, farewell to anybody that needs to hop off. I am going to stick around and answer any questions. I see there's 7 or so that have popped up. And so we will answer those. But for those of you who need to, go on with the day, thanks for giving me a little bit of your time today. I really appreciate it. Okay, a couple folks asking for this presentation. If anybody who wants a copy of this, shoot me an email. This is the easiest way for me to do this. So even if you've requested it in the chat or in the Q&A, still shoot me an email, nathang@narrpr.com. There's not really a good way, even though I'm doing this recording through Zoom and it's going to be on a Zoom cloud, they don't offer me an opportunity to email all the attendees. So anybody that wants, they don't offer me the opportunity to email all the attendees with this recording. So anybody that wants it, just shoot me an email, nathang@narrpr.com, and I will be more than happy to email that to everyone. Let me put that in the chat there. So yeah, let me know if there's anybody who wants any information there. Yeah, so a couple questions about the recording. I think I've addressed that. Very helpful. Glad to hear that as well. Are there other webinars teaching the basics of investment analysis for agents breaking into the investor market? Yeah, so Janet, great question. There's a couple of things I would recommend as far as trying to learn the investment market. So the first thing, let me show you. Oh yeah, let me back up. Get REFM. So this is the company REFN, Real Estate Financial Modeling. These are the folks that actually build Evaluate. And so Bruce Kirsch does a lot of great training. And so you can see here, he has all types of options for you. So lots of certification, some books, some shortcuts. They're a great option. I'll send this link in the chat. And then I'll show you a couple more as well. There's also, of course, our CCIM folks. They also do a lot of incredible educations. So if you're looking for some CCIM information, they are available. So I'll send that out in the chat box as well. Free stuff, if you go to YouTube, that is a great place to kind of at least learn some of the basics. There's a lot of really good training videos there. There's also, what is it? Michael Bull Realty. He also has a really great kind of training course for you as well. And he's actually done quite a few presentations with like NAR and so forth. And another thing he does, which if y'all aren't subscribing to this podcast, I definitely encourage you to do so. Not only he's based in Atlanta, but he does a nationwide kind of podcast about the commercial real estate sector, what's going on, talks to experts on lending and all that kind of great stuff as well. So they Michael is super knowledgeable about all that. And then right here, it's like he has a link to his commercial agent success. Lots of training available to y'all there. And then the last thing I will say, you go to realtor.org. I don't know if y'all have taken advantage of some of the Right Tools Right Now stuff, but I know they at least have a free investment analysis book because I actually downloaded it recently. And so you can come here and under this program, they have free PDF books you can download. There's also some training available. I haven't really dug into it a whole bunch, but they are offering through the Right Tools Right Now program, education, digital tools, and so forth. So I would check out some of those resources. And hopefully that helps everybody. But okay, I don't see any other stuff. Let me check the QA. QA is clear. Chat is clear. So again, if y'all have any questions or you want to get a recording of this, feel free to shoot me an email and I'll be happy to pass that along to you. Oh, you're very welcome. And otherwise, I hope everybody has a healthy and happy holiday season coming up. If you're like me, this is a good opportunity to kind of wrap up some projects and maybe do some learning. I'll throw this out. You can see LinkedIn Learning on my tab here. I've started to get into that a lot as well. And if you're interested in some LinkedIn Learning stuff, I would give them a look. It's such a broad category of stuff. I mean, from, personal finance to mindfulness and everything in between that. I mean, it's just a really great system that they've built, and I found it to be worthwhile. I'm using it right now to help me with, working with Excel and creating pivot tables and fun stuff like that. So that's another great resource for you. Okay, y'all. I've now stolen 9 minutes of your lives, and extra than I told you I'd steal to begin this with. So thank you all again so much for your time today. Hope everybody stays healthy. Help folks if you can. And yeah, let's just all enjoy this December, and looking forward to a happy and healthy 2021 as well. All right, everybody have a great day. Take care of yourselves.